still registered today. So today we'll be discussing the global success of UCITS. We have a paper, a market insights, that's delving into the latest trends of UCITS distribution outside of UCITS. That was written by me and my colleague Afzal Amijee from Broadridge. Let me maybe first before introducing Afzal, let me quickly talk you through the order of today's webinar. We'll be introducing the paper in about 20-25 minutes, and then we'll have a panel with 3 expert panelists on distribution outside of Europe. And then we have Q&A. So if you do have any questions, please post them in the chat, and we can handle them at the end of the webinar. But first, let me introduce my co-author, Afzal Amijee. Afzal is Product Director, EMEA Data Analytics at Broadridge. He's a senior executive with 20 years of experience in asset management and fintech. And I'm really, really lucky to have him as my co-author. So, our paper. First, I just wanted to give an overview of the size of the European cross-border market and the structure of it. The total European fund market is about 21.5 trillion, and we've seen really strong growth over the past years. So we can break it down in about 3 main areas there. You have the domestic funds, meaning funds that are domiciled, for example, in France and are just sold in France. And then you have the cross-border fund market, and that we broadly break down, this is all based on ECB data, on funds that are domiciled in a specific country and sold in another European country, or funds that are sold outside of Europe. The main fund domiciles for these cross-border funds are, of course, Luxembourg and Ireland, but you have some smaller domiciles that are also coming up here, for example, Cyprus or Malta, and some of the other countries like Germany or France have also decent cross-border fund markets. Over the past decades, we've actually seen domestic funds grow by about 83%, and both of the cross-border type funds have grown stronger. So cross-border funds in the EU rose by 145%, and outside the EU by 133%. One of the key drivers here has been the net sales of the funds. Overall, we've seen stronger net sales for cross-border funds than we have seen for domestic funds, especially cross-border funds outside of Europe are actually been doing quite well in the most recent years. 2022 was, of course, a difficult year with the war in Ukraine and rapidly rising inflation, which you could see there with domestic funds turning negative net sales. But cross-border funds continue to have positive inflows. Then in 2023 and 24, this rose up again, and in 24 actually we had the strongest net sales of funds, European funds outside of Europe. There are differences in asset allocation that also influence the asset growth via the market performance of the underlying assets, and of course via exchange rate movements. What we see is that cross-border UCITS, which account for the vast bulk of the sale of funds, European funds outside of Europe, these are almost exclusively UCITS, tend to have a higher allocation to equities compared to the entire UCITS and alternative investment fund market. This data excludes ETFs. This is an important caveat, and in the rest of the analysis later, we also will exclude ETFs because it's really hard to pinpoint where the end investor of the ETF is based. But this higher exposure to equity, especially of UCITS inside the EU, is part of the reason why the growth there has been stronger. If you look at the evolution of UCITS outside the EU, by type of fund, there has been in recent years only limited fluctuations. Now I give the floor to Afzal to discuss the different regions outside of Europe.
Thank you, Thomas. If you go to the next slide. So as Thomas mentioned, UCITS have been phenomenally successful outside of Europe, a growth rate of 133% compared to a domestic growth rate of 83% over 5 years. So where are they being sold? But before I go into that, let me take 1 minute just to explain how Broadridge collects the data. The data that we collect comes from over 100 asset managers. They're all global asset managers. They provide us with data of where they're selling the funds within and outside of Europe. That we collect net assets, we collect gross and net sales by location, whether it's sold to retail or institutional, and across channels as well, whether it's sovereign wealth funds, platforms, etc. And the data is very rich. We've been collecting it since 2001. It's collected on a monthly basis. So you've got a rich history of trend and analysis. Okay, so that's a little bit about where the data is coming from. Let's look at the data itself. As Thomas mentioned, most of the funds are domiciled in Ireland and Luxembourg, and they're sold outside, whether within Europe or outside of Europe. When you look at the map, the green area is Europe cross-border. So it's a massive area, but for today's focus, we're going to focus on other areas outside of Europe where funds are, UCITS funds are sold. Asia Pac is the largest by far. Asia Pac, we consider Asia and Australia. In the first half, the data you're looking at is first half of 2025. You see 641 billion in Asia Pac, but actually, if you look at 2024, it was even higher, 670 billion. So we are halfway through, and the data, hopefully, with the market movement, it might improve a little bit. Latin America is the next largest with 246 billion, followed by Middle East and Africa. You'll also see two other regions on the map. One is North America. North America is predominantly Canada, as UCITS are not allowed to be sold in the US, and offshore is Cayman and Jersey, etc. So quite a small markets there. And finally, you see another area called international. Now, international is where we receive data from asset managers, but we don't receive the country of sale. So we know it is being sold outside, but we don't have the country of sale. So overall, I think, just to emphasize the point, UCITS are very successful outside of Europe. It's one of the most successful financial product export from Europe, and it's sold in over 50 countries. Next slide, please, Thomas. So next, we're just going to focus on the regions. I'll look at Asia Pac. Thomas is going to look at Latin America, and I'll look again at Middle East and Africa. So in terms of Asia Pac, overall, it's a very large domestic fund ownership with almost 9.8 trillion. The largest markets are China, Australia, Japan, India, and South Korea. Where the markets are large, you also tend to find that they're well developed, and therefore there is higher regulatory complexities for UCITS to be distributed on those markets. The one exception we find in one of the large markets is Japan. In Japan, we find UCITS distribution of 4%, whereas all the other large markets is around 1%. And the reason for that is they are distributed through sub-advisory funds and master feeder funds. In terms of UCITS distribution, the largest UCITS distribution centers in Asia are Singapore, Hong Kong, and Taiwan. And as most of you will already be aware, Singapore is not just serving Singapore, but is serving as a hub, distribution hub for the rest of the Southeast Asia region. One country to just note here is Thailand. Interestingly enough, it has a quite a large percentage of UCITS distribution of 15%. But overall, Asia Pac for UCITS is the most important market by far. Next slide, please. Next, we're going to look at net sales and flows by country and by asset class in Asia. Net sales are at around 34 billion in 2024. It's not quite the 2021 peaks, but we are almost to pre-COVID levels, I would say. In terms of assets, asset type, mixed asset, the asset mix has, over the 5 years, has changed somewhat. We have, as Thomas mentioned, I think the trend we've seen globally is there's been higher allocation to equity, and in Asia Pac, it's been similar. 5 years ago, the equity mix was around 34%. Today, it's 41%. Money market has also increased from 6 to 9%. However, where we've seen a shrinkage is in bonds. Bonds have, decreased by around 10% in terms of market share in UCITS market. We saw the highest net asset sales flow with bulk going to equities in 2021. However, in 2022, as Thomas mentioned, there was war in Europe, there was interest rates volatility, and fund markets were adversely affected. In 2022, we saw negative flows, just like in every other region. However, one glimmer of sort of positive light has been multi-assets, so mixed assets. Even in 2022, we saw positive flows there. And that's a point to note in terms of diversification strategy for European asset managers. Mixed assets tends to be a bit contrarian in terms of in other regions. There's still demand for mixed assets. Overall, sorry, just one more point, Thomas. On equities in 2022, 2023, 24, and 25, we've seen negative flows. However, we got to also appreciate that there has been a switch in equities. We are seeing more switch in product wrappers. Instead of going into mutual funds, funds are flowing into ETFs. And I think that's reflected in some of the negative flows. However, in terms of bonds, we see a recovery in more recent years. In terms of countries, it's very much, as I mentioned in my previous slide, the three dominant countries are Singapore, Taiwan, and Hong Kong. And flows have recovered in 2024 to pretty much the extent of what they were, before COVID. Interestingly enough, one country to note here is China. We are seeing positive net sales in China in recent years as the markets begin to open up. So overall, flows, are almost back to pre-COVID levels, and H1 2025 looks promising, and hopefully we might see good numbers by the end of the year. Thomas, back to you.
Yes, I will discuss now a bit about Latin America, so the second largest region in terms of where UCITS are sold outside of Europe. This table is similar to the one Afzal just showed on the APAC region. It shows the total fund ownership per country, their market shares within the region, and then that's the ownership sort of broken down by what percentage is in domestic domiciled funds, so local funds, and what percentage is cross-border UCITS. If we look at Latin America, Brazil stands out as the largest market. The Brazilian fund market is very well developed. It accounts for about 70% of the entire Latin American region, but it's very heavily concentrated in domestically domiciled funds. It's not easy to sell UCITS there. Like it's forbidden to sell UCITS to retail investors in Brazil. You can have indirect exposure to UCITS by local funds investing in UCITS, but even there are caps. Retail funds can only invest 20% of their assets into these UCITS. It's a bit higher for qualified investors, but it's a very closed market still. Mexico is a bit similar. It has the second largest markets in the region, almost 10%. But again, 97% domestic, only 3% UCITS. The same sort of regulatory hurdles apply there. It's hard for European and foreign asset managers to sell their UCITS there because of tax reasons, and then it's also forbidden to sell to retail investors. What is an open market is Chile, with almost a 6% market share. Historically, this market has always been quite open, as mainly the Chilean pension funds are massive investors in UCITS. And you see that here in this 36% market share that Chile has right now. We'll go a bit more on Chile later. There are actually a few other smaller domiciles where UCITS are pretty well represented, like Uruguay, for example. Colombia also, and Peru, they have about a 20% market share, and we do see that growing. If we look at the net sales, in recent years, sales in the region, recent years, I mean 23 and 24, were mainly driven by money market funds. These flows were really high because Latin America sort of mirrors the US there, where they often invest in short-term US securities, treasuries and so forth. And short-term interest rates are really high, and you had an inverse yield curve, meaning shorter-term bonds had a higher yield than longer-term bonds, which of course boosted this push into money market funds. With the yield curve returning to normal at the end of 24, we see actually so far outflows from money market funds in 2025 so far. We've also seen consistent outflows from equity funds. This is related to what Afzal mentioned earlier. It's this vehicle shifts towards ETFs, from actively managed funds towards ETFs, which are not captured in this data. In terms of countries, where we have seen the most inflows is this region called US offshore. So these are actually American investors living in South America, where you have distribution of funds often through wealth managers in Florida, in Miami. And there we have seen in recent years some positive net sales. Whereas in Chile, the other big market for UCITS, we actually saw outflows in 23 and 24. As I mentioned before, they are shifting also towards ETFs and mainly towards US domiciled ETFs, because there was a lowering of the withholding tax in Chile on US ETFs from 30 to 15%. And you directly see that results into outflows from UCITS. This year, so far, we actually see very small positive inflows from Chile and from Mexico. So we're gonna monitor how that evolves. Now back to Afzal to take you through the Middle East and Africa.
So Middle East and Africa, again, similar story, like other regions. The largest market, are South Africa, Israel, Morocco, interestingly enough, Saudi Arabia, UAE, other, some of the large markets. In terms of UCITS penetration, except for Morocco, the other markets have fairly healthy UCITS penetration. Literally every market is over 5, in some cases, in 40% and so forth, the UCITS penetration. So overall, it's a positive story in Middle East and Africa for UCITS. One exception is Morocco, where Morocco does have a large market, but UCITS penetration is very low. Once again, similar story. The access and the complexity to launch a UCITS, it's much more complex there, and it tends to be very institutionally focused. Next slide, please. This is where it gets much more interesting. In terms of flows in the net asset sales, we see a very similar trend like other markets. You know, a positive trend up to 2021, right across all asset classes. From 2022, we see a negative flows. However, once again, exception is multi-assets. You know, it somehow over all the years it maintains flows. And when Thomas and I were discussing this, you know, we both came to a similar conclusion. You know, it's a diversification strategy perhaps, but it certainly maintains its flows despite, you know, whatever is happening in other markets. The largest markets here, as I say, are Israel, Saudi Arabia, and South Africa. We've seen negative flows in 2023, 24, 25. A lot of this is to do with geopolitical reasons in the Middle East, you know, the war going on, as well as liquidity calls, you know, in Saudi Arabia, particularly, you know, in 2024. We believe that's a lot to do with the large, you know, infrastructure projects and so forth there. Overall, the countries which are showing, you know, positive resilience are UAE, where the light blue color here on the right, where we've seen positive flows, you know, again in 2024 and 25. And yeah. So sorry, Thomas, I'm done.
Very good. Let me then take you through our policy recommendations. So one of the key elements to the success of cross-border UCITS is the investment flexibility of UCITS. You have a broad universe of eligible assets UCITS can invest in, and that can serve diverse investment strategies. And that combined with standardized risk management and liquidity treatments make sure that investors have confidence in the product. There is also the competition element. Herefore, it's crucial that we maintain the gold standard that UCITS set in investment funds across the world. And for this, we advise that the EU takes a strategic and forward-looking approach. We should ensure a stable and supportive regulatory framework that avoids frequent rule change, because those frequent rule changes risk undermining confidence in the UCITS brand amongst extra EU regulators who often mirror their legislation on this, on the UCITS, and also investors across the world. It's important to look into how the success of UCITS can be replicated for the alternative investment funds, and particularly for the European Long-Term Investment Fund, the ELTIF, because we do see growing interest of investors in private markets. I think the panel will discuss this a little later. And thirdly, we need to deepen engagement with foreign regulators and industry to explore how financial regulatory dialogues can help strengthen the UCITS and the AIF brands. These dialogues should, first of all, help facilitate access of European and international asset managers to foreign markets. And also, they should explain to foreign stakeholders, be it investors, be it regulators, to understand the rationale behind regulatory evolutions in the EU framework. The framework is very complex often in Europe. You know, you have the level 1 legislation, the RTSs, guidelines, Q&As, ESMA. It's very complex. And I think sometimes European policymakers sort of forget that jurisdictions around the globe have taken inspiration from this. And changes to the EU regulation there, it can result in unforeseen complications in these jurisdictions. So these are sort of the three messages we want to convey to European policymakers to take into account when they make any adjustment to the UCITS framework, or in general to changes in the financial regulation. This sets us up nicely, I think, for our panel discussion, which will be discussing challenges and opportunities across multiple jurisdictions. So I'm going to give the floor to Marin, my colleague, to introduce his panel and take it away from there.
Thank you, Thomas. Thank you for this interesting presentation. We often hear that UCITS is the gold standard for fund distribution. It's good to have a hard figure that concretely demonstrates this and show where UCITS funds have been a real success across the world. My name is Marin Capel. I'm the coordinator of the EFAMA International Development Workstream. I'm excited to be here today with three distinguished industry experts to discuss these market insights. We have first Louise Tudor-Edwards. So she's a partner at Simmons Simmons, a distinguished law firm. Currently based in Singapore, Louise advises both UK and APAC fund manager on a wide range of regulatory issues, including cross-border fund marketing and distribution. We also have Pierre-Yves Jahan. He is the head of distribution at Carne Group, a leading white labeling firm, as you may know. With his team based in a number of jurisdictions across the world, Pierre-Yves helps his clients accessing European and international clientele. And last but not least, we also have with us Rodolfo Crespo, head of market insight at Allfunds, a global B2B fund distribution platform. As part of the strategy team at Allfunds, he leads the insights function with a strong focus on fund distribution. Thank you to the three of you for accepting to speak with us for the next 40 minutes. During the panel, we will first discuss the current distribution landscape. We'll then turn to the reason for the success of UCITS and the role of regulation therein. And then lastly, we will discuss emerging trends where we see growth potential in the coming years. Starting with the first topic, the distribution landscape, let me turn to you, Rodolfo. Allfunds helps European asset manager distribute funds worldwide. To do so, you have office in Latin America, the Middle East, and Asia. In terms of UCITS distribution, what is currently happening in this region?
Thank you for having me today. Good to be here with you guys. So first off, allow me to say that at Allfunds we are super proud to be contributing to the success of cross-border distribution of UCITS on an international basis, globally, alongside fund partners and distributor clients. Now, to answer the question, I'm gonna structure in three core elements. So one is the long-term structural demand for UCITS. The second one is the current momentum we are seeing in the market for UCITS. And then the third one is around the regional distribution channel dynamics that we are seeing as well. But the good news is that overall the message is, very well aligned with the great paper being presented today. Now, if we start with the long-term structural trends supporting growth of UCITS outside Europe, we have seen that in our distributor base, consisting of fund buyers across private banks, insurance companies, fund managers. If you think about that distributor base, over a third of the fund buyers are from Asia, from Latin America, from the Middle East. The client base coming from those regions is growing. In particular, in Asia, the growth over the last 3 years has been remarkable. Now, a key driver for that growth overall has been the adoption of open architecture programs at these firms. So typically looking to access expertise from international asset managers, and that typically involves accessing UCITS products. Now there is also an element of the reassurance and the stability of the UCITS brand, of course, typically tied to Luxembourg and Ireland as fund domiciles. There are some tax considerations as well in some countries, but overall, we also see that that strong, long-term demand for UCITS playing out in regions like Latin America, Asia, and the Middle East. Now, if we think about the second element, which is the momentum, what's the current momentum for UCITS in those markets? Well, to give you an example, in the first 6 months of this year, almost half of the clients, distributor clients we've onboarded onto the platform are coming from those 3 regions outside Europe. So again, that shows the strong momentum and the appetite for open architecture and UCITS coming from those markets. But also, if you think about the client flows, the actual flows, actual money invested into UCITS, we are seeing that again, H1, first half of the year compared to the previous year, we are seeing an increase of flows of about 36% year on year. So really strong momentum for the UCITS products in those regions as well in terms of flows. The third area would be to look at distribution channel dynamics, and it's super interesting to see how these distribution dynamics are different, not only across regions but also within regions, across countries. So if we start, for example, with Latin America, the situation is very diverse. So in terms of the flows and the momentum we're seeing, so in Chile and Brazil, the distribution of UCITS is at the moment we're seeing as being dominated or influenced mostly by bank-sponsored fund of funds. But if you think about Colombia, it's more about the local pension funds. And then you need to add into the mix the US offshore market. So, this is expanding offshore hub for Latin American investors being served from the US, where, because the distribution is very different, is dominated by private banking networks, by advisory networks. The access to UCITS as well, the type of products they're accessing is different. So it's a very diverse picture in Latin America overall. But then if we think about Asia, it's more of the same. So the large private banking groups have historically dominated the distribution of UCITS in Singapore and Hong Kong. But more recently, we're also seeing strong demand for UCITS coming from local stockbrokers, local smaller wealth managers as well, which is good to see. But then that's Singapore and Hong Kong. Then if you go to Thailand and if you go to the Philippines, so some of the fastest growing markets in the region, what we see is that the typical use case for UCITS is, as we saw in some Latin American countries, is to include UCITS as part of the fund programs from the retail banks. So that way they are providing access to UCITS indirectly to retail investors. Last but not least, we have the Middle East, and I want to focus on the UAE, which is a key market for UCITS in the Middle East. In the UAE, the local banks and the local insurance companies have been dominating the flows. And we continue to see them. We continue to see these distributors buying UCITS, and that's despite a slowdown in the context of the recent regulatory changes, of course. That actually brings me to the potential challenges that we also want to discuss today. So potential challenges for the growing adoption of UCITS internationally. So clear one would be the competition from local fund structures. That's a major one. So either through more restrictive regulation, as we've seen in the UAE, of course, but also, when we see incentives at a local level to promote local fund structures. And then, of course, the consideration of the potential scalability of the local product for an asset manager, when they're thinking of entering a particular market. So far, we've only seen that playing out, that scalability approach, those local incentives in Hong Kong, where we're clearly seeing strong competition for UCITS coming from their local fund structures. But overall, as a brief summary of the kind of the long-term trend, good momentum in the short term for UCITS and the distribution dynamic, it's clear that there is plenty room for growth still for UCITS outside Europe. And of course, we look forward to continuing to support asset managers in the cross-border distribution of UCITS.
Thank you, Rodolfo. Sometimes we hear that UCITS, may not continue to grow as it did in the past, but it's good to hear from you that it's not the case, in fact. Perhaps we can turn to Pierre-Yves to see whether he can complement what you said in a few words, whether there is some specific aspect of international distribution he would like to raise.
No, indeed, this is so we are positive on the trends on the UCITS, irrespective of the domicile of the UCITS. When we talk about cross-border distribution, especially outside Europe, we're more talking about the professional investor. And indeed, as Rodolfo explained, and the trends presented by Broadridge today is that the next sales are here. And Rodolfo mentioned pension funds. All those markets are opening to pension, and because of transparency of the product, multiple assets, as you mentioned, Thomas, too. The first traction is really from the professional investor, and Louise will potentially talk about the Asian professional investor, which are, let's say, educated, interested, and investing into UCITS. So yes, definitely, we are positive on this cross-border trend of UCITS. First, with professional demand, and potentially in the second stage, as we are seeing in Europe, retailization.
Thank you, Pierre-Yves. So I think the distinction between retail and institution is important, and hopefully we will be able to go back to that. Louise, do you want to say a few words? You are based in Singapore. It's an important fund hub, as we discussed before. So is there a specific dynamics in the APAC region?
Yeah, thank you very much. I think absolutely the data that we saw earlier on was very indicative and reflective of the popularity of UCITS here in the Asia region. And as an international law firm, we obviously are regularly advising managers on how they can distribute funds across the region and what markets they can access. And I think broadly, from our experience, interest in UCITS in the region remains pretty strong. We're not seeing any sort of tail off or sort of significant changes in that. I think as already mentioned, Singapore in particular is a main distribution hub in the region. But the brand more generally is very well established here. I think we've already mentioned that the bigger markets are places like Hong Kong, Singapore, Japan and Taiwan. And of course, part of the success in places like Singapore and Hong Kong are the fact that we have these specific frameworks for recognition and distribution of UCITS, not only to professional investors, but also to retail. So I think it's quite unusual, obviously, outside of the EU to have that ability to sort of directly access retail investors in many jurisdictions. But obviously we have that ability here in both Singapore and Hong Kong. In particular in Singapore, we see UCITS being very popular among the kind of private banks and wealth distribution channels as well. So I think, there is probably more retail interest here than you might have in other sort of jurisdictions elsewhere. In the kind of wider region, the picture is a little bit more patchy, again, mainly driven by the fact that it's a lot harder to access sort of retail in those jurisdictions, and you're really looking at, you know, either setting up specific local feeder structures or relying on sort of private placement regimes. So it's not as easy or retail friendly in those jurisdictions. And indeed in Japan, I think, which is one of the bigger markets, it tends to be still more kind of institutional investors that are looking for diversification really than sort of direct retail. But I think, you know, broadly the trends that we see here very much accord with what others have said, and you know, the sign is generally pretty positive still.
Thank you, Louise. What we often see, I mean, Rodolfo mentioned the fact that EUA, for instance, there will be a crackdown in the distribution of UCITS fund to retail investor. It's good to see that we see different dynamics in Asia. You mentioned Singapore and Hong Kong. Rodolfo mentioned Thailand with the stockbroker. So perhaps something that we can discuss if we still have time during the Q&A session. But let's move to the next topic. That is the UCITS as a gold standard and the role of regulation therein. Allow me, Pierre-Yves, to turn to you. Thomas already mentioned a few factors that explain the success of UCITS in across the world, but perhaps you can elaborate on this a little bit, and also let us know or you foresee some regulatory development on the EU side, such as the Eligible Asset Directive, could impact the brand?
No, perfectly. So I think for that, we need to step back a bit and to explain why it was a success. Indeed, a UCITS product is known because of the accessibility first of multi-assets for the product, but more importantly is because of the liquidity of the product. This is a profile of the product that from a global perspective, this is well perceived by retail and professional investor. More than that, because of regulations, I think we may complain in Europe that we got too much regulation, but this was seen or perceived from outside Europe as an investor protection. That was part of the of building the brand and building the reputation of the UCITS product globally, and lastly the transparency of this product. So having built up those, let's say, 4 elements: multiple asset, liquidity, investor protection plus transparency, this is why it was a success. It is a success, and it will be. I think Rodolfo even explained the momentum of it. So we will have, as you said, Marin, the Eligible Asset Directive, but we will have even more in 2026, UCITS number 6 in April 2026. So having multiple pieces of regulation will continue to promote the good angle, the good profile of the UCITS product. And when we see the innovation within the UCITS product, with the ETF being really a significant component of the promotion of the UCITS, or having the new trend from the defense funds, the ESG funds. So all these, let's say, innovation investment strategy contribute to, first is allowed by regulation and contribute to promote the UCITS brand from a global perspective. Having said that, it's always a good balance between regulation, pragmatic, and investor appetite. Having, let's say, as you mentioned, Marin, the Eligible Asset Directive, UCITS 6 coming. We got, even from a retail point of view, the retail package that will impact the UCITS product. All these pieces of regulation, which are heavy regulation, we think it will continue to promote the brand, but we need to be cautious, especially how this is transposed and how this is interpreted and understood by non-EU countries. So this is really in this aspect where the UCITS products need to evolve, continue to evolve on those 4 pillars, and we're positive on the fact on that. I don't know if maybe Louise or you want to jump on this piece too, from a law point of view, if you see any let's say boost or pain point on the EU regulations?
Yeah, I mean, I think again, if we step back and think about what the attractiveness is sort of globally of the UCITS brand, it is, you know, the fact that it's subject to strong regulatory oversight, as you've said, you know, very high investor protection standards, as well as the sort of broader benefits of global diversification. And, you know, the UCITS directive has obviously been refined over time, but if we kind of step back and think what is typically the driver behind those changes and what is it that regulators are concerned about, you tend to find that there is sort of general alignment. So, you know, if we take, for example, as you said, the kind of changes proposed under the Eligible Assets Directive, you know, it's really recognising the evolution of financial markets since UCITS first kind of came into force, and the fact that there are these new asset classes and financial instruments and investment strategies that just weren't really sort of captured within the initial UCITS directive. So, you know, generally the changes that are being introduced are intended to make sure there is sort of adequate harmonisation and investor protection, you know, in that regard. And again, you know, UCITS 6, the main changes are things around kind of liquidity management, enhanced reporting, tightening up of delegation. So again, very much investor protection based. So, you know, I think the reality is that for investors, international regulators, if we look at the likes of the MAS and the SFC here in Asia, you know, unless we're doing something that's really going to kind of negatively impact on investor protection, you know, whilst they will obviously kind of look to and be paying close attention to those changes, I think generally speaking, they would hopefully be kind of supportive of those regimes. And I guess, you know, we've seen examples with the SFC and use of derivatives, for example, where if they're not happy about something, you know, one option is to require kind of additional disclosure. But I think, you know, our experience generally in the region here is that the local regulators, you know, look generally positively on regulatory developments and things in Europe. And we often, in fact, see that, you know, when things get brought in Europe, they end up being transposed into sort of domestic fund regimes here as well. So, you know, I think it's absolutely something to be mindful of and be thinking about. And, you know, no doubt there is engagement between regulators behind the scenes on these matters. But, you know, as I said, as long as the sort of themes are, as they have been to date, generally intended to sort of support and protect investors, then I think from a regulator perspective, that's generally viewed positively.
Thank you, Louise. It's good to hear that there is alignment between the regulator and that the frequent change in the European framework is not seen negatively. But perhaps I can turn to Rodolfo to see whether he gets any feedback from the local investor about this regulatory change and whether it's something that's come up at all in discussion with them, or is something that is unnoticed, we'll say.
Sure. Yeah. So the feedback from clients is around the fact that the stability, the perception of a stability of the UCITS brand continues to be key for them. And it will remain in place for the time being. Now, having said that, we need to acknowledge that they are clients, investors. They are also increasingly looking at new asset classes, alternatives being the main example, but then also crypto as well. So, you know, we need to be mindful that they will be looking into you know, allocating more into those asset classes and what the impact that might have to the not only UCITS here, it's, you know, the wider European fund domiciles, you know, because they're likely to face strong competition from other jurisdictions.
Thank you, Rodolfo. So the silver lining from the three of you is that we need stability, but at the same time, we need to be adaptable and to take into account the change in the markets. And thank you, Rodolfo, as well. I think it's a good segue. The next issue that we would like to discuss is emerging trends. So, you know, where is the growth in the distribution of funds globally? And to speak about this, I will turn to Louise. What are the emerging trends that you are seeing in the APAC region?
Well, I suppose firstly we should talk about this trend of democratization of assets and the sort of rise of semi-liquid vehicles, because obviously that has been a significant trend in the last few years in America and Europe, and indeed we are seeing that sort of moving across APAC as well. So most recently, a few months ago, for example, the MAS, the Singapore regulator, put out its proposed consultation for its own sort of domestic semi-liquid sort of retail private fund structure, so similar to the likes of the LTIF and LTAF that we have in Europe and the UK. So still very early in its sort of process with that, but interesting that there is a new demand here and interest in domestic regimes that are doing a similar thing, and we know that other regulators in the region are sort of looking at that now. Clearly a semi-liquid fund is not the same as a retail as a UCITS fund, sorry, but it will be targeting that kind of top level of retail investors. So the more kind of professional institution, high net worth kind of sophisticated end of retail will be looking for alternatives to sort of public markets, and that is likely to be of interest to them. So we're still, as I said, that is a trend that we're seeing kind of globally, and we're expecting to land in the region here as well. Ultimately, as I said, they do serve different purposes, so I don't see one replacing the other. But it is clearly a trend that is not going anywhere, and so may have sort of some impact initially on that sort of top end of retail, which given obviously what we've discussed today and the fact that outside of Europe a lot of UCITS distribution is to that non sort of retail or high net worth bucket, then I think that's something just to watch out for. And then the other area I think for me is just the kind of rise of domestic funds. So I think a lot of regulators in the region here are still sort of hopeful and trying to establish domestic fund structures of their own. But I think there is recognition that individual jurisdictions doing that alone are not going to have much success in competing with the likes of the UCITS funds. But we are seeing a bit more of a trend of kind of regional hubs for distribution. So the GCC passport, for example, in the Middle East, in APAC, we have the Asian Collective Investment Scheme framework, which again is intended to really support the equivalent of like passporting for domestic Asian funds in the region. So, I don't think we're at the stage where any of those are sort of significantly threatening UCITS on a global scale, but clearly there is still more of a trend towards these kind of regional hubs for different types of fund structures.
Excellent, thank you, Louise.
If I may add, indeed, the UCITS products are seen as a complement. There is of course the local product which are competing with the UCITS product, but I think we come with another targets, another performance, diversification, sometimes part of a wrapper. So in Asia it's for a global asset manager the first target after Europe, and then they go to LATAM when in terms of chronology, for all the reason that Louise just explained, in terms of education, fast track. Hong Kong put a fast track back in May, if I'm not mistaken, this year. So there is a wish from local country to attract UCITS products, at the same time to develop their own solution. But I think it's complementary. If it's a different business model, and both can coexist in the local jurisdictions and be successful. Yeah.
Thank you, Pierre-Yves. Thank you, Louise. I think we have covered quite a lot of ground. We have looked at quite a lot of topics that would deserve further attention. Unfortunately, we are running out of time, so if it's fine with the panelists, I will thank them for taking the time to speak with us and turn to the Q&A. So I already see a few of them, but please, you ask any question you may have. We would be happy to take them on. So the first question comes from Iris Boulot. And she asked, in Uruguay and US offshore, UCITS fund have 100% market share. Can you please explain this? And I guess it would be perhaps to Afzal and Rodolfo to take that one.
Or I can maybe start there with explaining the data a bit behind. So the US offshore is what Rodolfo mentioned. It's these US investors living in Latin America, often investing through wealth managers. And there, I mean, the way we looked at the data in the paper is either you invest in UCITS or you invest in local funds. Of course, what the part that's missing there for those investors is how much they would be investing in US funds, which is not captured in the paper. So this is why we have this 100%. I'm sure if you look at their holdings of US funds, that would also be higher. And Uruguay, yeah, it's a very small market, and according to the data we have, it's fully there focused on UCITS. I don't know if Rodolfo has more to add there.
Yeah, no, just to add some color to that. It's it's around the fact that in these markets the local distributors serving the Latin American clients have been establishing open architecture programs, and obviously there is an element of scale here as well. So once you establish a relationship with one particular fund group to access their UCITS, it makes sense to continue to expand into more relationships, and at the end of the day what they're doing is to work with a pool of managers across all the main asset classes that they need to complement compared to the other holdings, US holdings, for example. And then there is also an element, this would take time to go into detail, but there is an element as well of the more flexibility that the UCITS wrapper provides compared to the US wrapper around the accumulation and distribution share classes with some underlying tax implications as well. So I think those two factors are clearly supporting the allocations into UCITS in US offshore and Uruguay as well.
Thank you, Thomas. Rodolfo. We have one more question regarding the UCITS eligible asset directive. ESMA has suggested creating a new product for selling certain assets to retail, crypto, commodities. In its view on the UCITS eligible assets, if so, what would be the impact for UCITS? I guess this one I will turn it to Pierre-Yves, considering that Carne Group also launch funds, so perhaps you can tell us what is your thinking about this kind of UCITS.
So indeed, we do have we're based in the UK, Ireland, Luxembourg, and so we cover multiple jurisdictions indeed, and so we are subject to those topics. So we're quite prudent in terms of cryptocurrencies. I think all the regulators discuss about it. It's something which is, of course, there is a strong demand from the market. If you look at the feedback from CBI or from CSSF Luxembourg, they tend to say that it's for alternative investment strategy. So UCITS will not be yet directly impacted. That could happen. I think there is even a strong demand of UCITS crypto or Bitcoin ETF. As we discussed during this panel, UCITS was always on top of the curve in terms of innovation. ESG, defense, blue economy. So all these topic were captured and well implemented into the UCITS eligibility assets. We're not there yet, but indeed there is a reflection around commodities and crypto as the panel, the person on the chat put as a question. The impact could be positive because it's a real demand. However, as we explained, UCITS 5, UCITS 6 are heavily regulated directive, and for the time being, we need to ensure that the ecosystem comply with those regulations in terms of eligibility. And some regulators, I remember that, for example, Hong Kong was quite keen to look through the prospectus of the UCITS, especially on the derivatives. It could be the case that tomorrow, if there is a crypto, as an example, within the UCITS portfolio, they might be prudent and potentially reluctant to have this type of product. So could be seen as an opportunity. This is definitely something which is on the radar, but should not be for today, maybe for tomorrow. Yeah. Don't know if this is answering your question.
I'm sure it is. Thank you, Pierre-Yves. Thomas, do you want to say a few words to conclude this webinar?
Yes, thank you. Thank you to all the panelists. Thank you, Marianne. Thank you, Afzal. Thank you, Rodolfo. Thank you, Louise. Thank you, Pierre-Yves. I think we had a very nice discussion on the challenges and opportunities of distributing UCITS outside of Europe. Our paper will be released this afternoon. It will be freely available. There will also be a recording of this webinar online that you can look back at your leisure. If you have any other questions on this, our names, Afzal and my names, are on the paper, so feel free to contact us. And if you have any other questions to the panelists, you can also contact them directly. So thank you very much. Wishing you all, wherever you are around the globe, a good morning, evening, and yeah, thanks for listening. Bye-bye.
Thank you, everyone.